You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
We can de-risk a lot of the exploration. So that is what we know exists between 400 to 800 million NPV10.
On an intrinsic value, then, what would that translate into approximately on a per share basis?
It would be about, I think it was $4 to $5.
And you discover something, 1 TCF. This is the blue sky. What does that translate into on a per share basis?
Yeah, it'll be at least $10. And we are drill ready. And if we, it's an exploration location. And if we hit a similar type deal, even a small deal compared to what we see south of the border, our shares are multiples of $10 value, right? If you're talking 50 million barrels recoverable, 100 million barrels recoverable, 100 million barrels will have a value, like a market cap value, basically of $4 to $5 billion.
Thank you for tuning in to Mining Stock Education. I'm your host, Bill Powers, and in today's show, we are doing a follow-up interview with CEO Art Halleran of Halleran Energy. We featured this company about 2 weeks ago, and there was a nice about 200% run in the stock. It's experienced a pullback since then. So there have been questions that have come in, both from listeners as well as some of my friends that are texting me, Bill, are you going to sell? What are you going to do? Is there still potential here? And my answer was, I haven't sold anything. And let me explain to you why I think that there's not only a lot of potential, but potentially huge potential that we're going to discuss today. And I learned about this, not just the undervalued nature of the company, but the massive, even multi-billion-dollar market cap potential in my first call, which was about an hour with Art Halleran. And we didn't cover that in the introductory interview because there's only so much you can cover, but we're going to delve a little bit more into it. We've covered the undervalued nature of the company. If you look at the market cap, it's US about 20 million. But if you were to build the infrastructure that they have today for their natural gas production in the Black Sea off the coast of Turkey, it'd probably cost you close to $500 million, their cost. And then on an intrinsic value, if you look at the gas reserves, over $1 per share, yet the shares are trading between 15 and 20 cents US right now. So the undervalued story is there. It's still there. But the growth and the huge blue sky potential is what we're going to delve into more today. So Art, welcome back onto the program. And for the first question, regarding your compensation and skin in the game, some questions came back wanting to know, I believe you have about 6 million shares or so. And the question was, if the company is so undervalued, why didn't Art buy more than only 6 million shares? If we could start there, please.
Okay, well, thanks for the second interview. So what I believe that an investor puts his money into the company waiting for the success. And also as a CEO, I believe the same thing. And if I don't believe in myself, how can I get other people to believe in my story? So the reason why I have 6 million shares is that I initially was an independent director before I took the company over. And so when I became the CEO, I didn't have very many shares. But at the same time, I only charged a minimum wage when I started because I thought, why draw $25,000 a month from the start? If I'm still working at it, like, why should I get paid if the investors don't? So I charge between 8 to 10 grand a month. And that's the wage that I get. My wage will increase to 13 grand a month once I drill the first well on the SASB, and then it goes to 25 grand a month when the first phase, those undeveloped discoveries are on production. So I get paid the same for my successes as the shareholders do. So getting back to why I have 6 million shares, I converted 90% of my wages into shares. I paid invoices and put money into the company. I converted that into the shares. And so when you only make 8 to 10 grand a month and you convert it into shares, it's a slow build. Whereas I could have said, I'm going to pay $25,000 a month because I have 40 years experience. I have a Ph.D. For the last 3.5 years, I got 25 grand a month. I converted it all to shares, and I would have a zillion shares, which would not be fair to the shareholder because my payday is their payday.
And Art, at that time, we should also point out that you used your own money. When you said you converted invoices into shares, you used your own money for some of those initial studies to help move the project forward, right?
That's correct. So for like key studies that we needed for the engineering report, we couldn't raise the cash. So if I didn't use my money, we'd probably be still in that position right now. So I used my money to pay for some of the seismic reprocessing and remapping so that we would have that data for the engineering report. And when you look at the engineering report, that added a couple $100 million value. And it's just because it's a report, but it's credible third party. Whereas before, us just saying it has no credibility.
Art, the second question that came in was, how can this be so undervalued? And part of that goes to how you acquired the SASB project and how it's not reflected on your books. Could you give us a brief, succinct answer for this, please?
We purchased a $300 million asset for about $2.7 million. So this was the subco, but because there was virtually no reserves left in SASB, and there was no value really attached to it, we were given advice by auditors and also people who know a lot about the security laws and so on. They said, if we have no reserves, because remember, we didn't have that report, we have no reserves, then we have to write off the assets, right? And now the fact that we have the reserves back on, we are now looking at getting legal advice of putting that asset back on the books. The comment was, you can't have a couple $100 million asset if you have no reserves attached to it, right? Whereas now we do have the reserves attached to it.
So the reserves you factor into your intrinsic value that you've shared is over $1 per share US, and this is at the SASB project. You told me you view this project as the engine of the company. As in September of this year, if all goes as planned, you're going to be starting to receive 1 million plus cash flow per month. But we didn't delve into, in our last interview, the growth potential that you see here. Talk to us about, in 18 months, what type of cash flow are we looking at?
Yeah, so when our initial talk, I was talking about the actual drilled, not produced pools. So we have 4 of those. And so all our numbers are $1.4, $1.8 million cash flow per month comes from those ones. But we have another 6 development locations that will be equivalent to those 4. It just that it had a slight more, you can't say they're 100% there because they were not tested and drilled, but they're identical and we have an 80% success rate. So we'll continue to drilling those and those will be added on. And so we should be up to, $4 million per month cash flow. And also another thing that came up is that we will, 3 of the locations we will end up doing first, and those 3 locations alone will generate us up to $1.4 million a month cash flow. But over 24 months, it's an average of $1 million per month just from those three actions.
And then there's growth that you see as a Ph.D. geologist of 4 decades of doing this. Talk a little bit more about the blue sky growth that you can see that may not be reflected on paper yet.
When you have an engineering report, there's a lot of, I call paper cutting. So if you just take the regular engineering report that we have of the proven developed locations, but we haven't produced, and also the prospects, it gives us a net value of about $157 million. But in that, they penalize 10% by saying if we don't get the money, right? And at the same time, they use very pessimistic recovery factors of as low as 56% recovery. That means of the 100% gas that we have, mapped, we only recover 56%, but we already have experience from the 4 fields, so we know what it's going to do. So just changing those 2 numbers for a 2P type reserve and so on, we've already upped it to $230 million, from 157 to 230 million by spending no more money, just by putting the correct recovery factors in it and removing a penalty that shouldn't exist, because if we get the money, that penalty isn't there, right? And on the high side, it's up to $400 million. That's our percent. That is just using their reports and changing a few of the paper numbers, right? We also have exploration that we have on the block, and some of the risk factors they use for the development locations, or well, I won't get into it, but once we start correcting that, and the exploration locations, we're going to de-risk, because we're going to start redoing the seismic. Again, middle of the road, 2P, conservative, gives us a value of over $400 million. And the high end is up to $800 million. And that is just from the targets that we have identified. A lot of that ad is just paper ads. And then the exploration is redo the seismic, because it was good quality seismic, but it was reprocessed with older methods. We have new methods now, and then we can de-risk a lot of the exploration. So that is what we know exists between 400 to 800 million NPV10.
On an intrinsic value, then, what would that translate into approximately on a per share basis?
It would be about, I think it was $4 to $5. Because if the value is about $1.25, or 156 million, 400 million, you could say, 3 times that, 4 times that, because it's between 400 to 800 million.
Art, in this past week, I scheduled a call with one of your key shareholders, and I just wanted to know why they invested in your company and understand from their perspective the blue sky potential. This key shareholder owns millions of shares, and he's been invested in Trillion since 2015. And his average cost basis is actually higher than where the shares are trading at today. And I said, okay, so tell me why you're still holding on to your shares. Let's start with the SASB. And I was using a 5 to 6 multiple times your cash flow to try to calculate an approximate market cap of where you might go. In his perspective, he said, Bill, I'm hoping for a 15 times multiple, because with energy stocks, if you can show the blue sky potential, the market often rewards you with a 15 times multiple. That was music to my ears. The second thing he said is, because we're only 80 kilometers south of the biggest natural gas discovery, a 14 TCF natural gas discovery in Europe, the biggest one in 30 years, he says, I'm expecting and hoping for somewhere between a 1 to 3 TCF natural gas discovery, because he said anything above a 1 is world class. Okay, assuming he's right, and you discover something 1 TCF, this is the blue sky, what does that translate into on a per share basis?
Yeah, it'll be at least $10.
$10 in addition to what the value already in the company.
Yeah, and you can see though, if I say 5 to 6 and he says 15, shows you I'm a pessimistic guy.
Right, you're a geologist.
So maybe I'm being pessimistic to $10.
Well, you've gone through the academic rigor and they don't let you just put anything on an academic paper, right? You have to have footnotes, and it has to be justified. That's another reason why I wanted to get a couple of different perspectives. Okay, so we've talked about the cash flow. And last thing before we leave the SASB gas field, your production is about $2.35 per MCF, right? But you're going to be paid, you expect, about $7 per MCF, which is multiples of what North American gas producers get.
Yeah, that's correct. And like I said, there was a crunch for the COVID, but every month, January, February, March, we have received a price increase in our gas in Turkey, and we project that the trend will continue. And when you talk about the large discovery at 80 kilometers north, with our seismic, and there's some 2D seismic lines and so on our block, we're going to be looking for deeper potential. because we have the same source rocks. And, the idea is we have to look for the reservoir rocks. But at the same time now, we are going to apply for a technical evaluation permit and maybe 100,000 hectares. And what that does, that gives us the ability to take a large piece of land around and on our block, but specifically around our block, and do geological studies to evaluate for similar type prospects that we have on our block, but also for deeper and different type of deposits that potentially could be a lot larger.
Mm-hmm. And the second blue sky potential that you have brought to my attention in our first call, and that this key shareholder brought to my attention, was your Derecik oil exploration project in southern Turkey. Before I share what he said, could you walk us through what gets you excited about this project?
Yeah, okay. So part of Turkey has a little, it juts down into the northern Iraq geological province. And that's where the Zagros Basin occurs, or part of the Zagros Basin occurs. And in that basin, you have the huge fields. So you'll have 300 million barrels recoverable, 100 million barrels recoverable, 50 million barrels recoverable, 1 billion barrels, production of 100,000 barrels per day. And it's just progressed from the flat to more the rolling hills where they had to control, and is moving north. And now it's fairly close to our block. We have the same geology. We have the same reservoirs, the same source rocks. We have oil seeps that the oil has been tested, which is identical to the oil that's produced in northern Iraq. And we have a location there that's defined by seismic. We own 100%. We have a large land holding, and we are drill ready. And if we, it's an exploration location, and if we hit a similar type field, even a small field compared to what we see south of the border, our shares are multiples of $10 value, right? If you're talking 50 million barrels recoverable, 100 million barrels recoverable, 100 million barrels will have a value, like a market cap value, basically of $4 to $5 billion.
And our market cap is 20 million today.
Yeah,
just to put things in perspective.
Yeah.
So that was why he was getting excited. And he was pointing out to me some discoveries that occurred south of the Turkey border right there, in not as good of a jurisdiction, that received billions of dollars of market cap that was added because of their oil discoveries. So talk to us about the benefit of being north of the Turkey border versus south in northern Iraq, where things are much more unstable and less economically favorable for the companies working there.
Yeah. Okay. So the two issues, one is fiscal. So we pay 12.5% royalty and a 20% corporate tax. So if we were to find, say, a 50 million barrel field on our side, if you cross the border, you would need about 150 to 200 million barrel field. That's how different the fiscal regimes are. There's a back-end clause, there's R factors, there's high royalties. So that alone makes a big difference. And then also for security, we're in Turkey. Turkey is a EU country, is part of NATO, and we have a very secure area. And that's why we can drill a well for $10 million. Whereas south of the border, you're talking a lot of multiples for that cost.
And that cost to drill it would be $10 million. And the time frame, isn't it next year, 2022, where you want to test that?
Yeah, we have to. Right now, we have an extension due to COVID. And so we would really have to drill the well in 2022. Budget.
And that's where you have referred to the SASB project as the engine. That's the cash flow engine that's going to allow you to further explore not just the SASB field and the surrounding licenses, but to pursue this Derecik license here and this potentially multi-billion-dollar exploration play.
Yeah, that's correct. I've seen too many companies what I call a shot in the dark. They build their whole company on a really high high risk but potentially high return project or prospect. But like you say, I have a Ph.D., I have a lot of experience, and it's like a 10% chance. It's a good 10%, but you can't secure a company on that. So if we're successful, we have a very high value for the shares. If we're not, we get to write it off our income. It affects the company not at all. And that money is generated from SASB. And there's other opportunities like this in this area that we can use SASB to generate the cash, give us stability, give us a nice growth for our shares. And then we have this these high impact exploration type prospects.
And as a shareholder, would it be accurate for me to refer to it as a free oil option? I mean,
yeah, that's correct. Yeah,
it's a free option because the value is there in SASB alone, but you're going to use that to just basically buy an oil lotto ticket for me, right?
That's correct. Yeah.
So there's a lot going on over the next 18 months. We've covered the undervalued story. Now you've seen the growth and the blue sky potential here. This is why I haven't sold any of my shares, as the shares went up 200%, but they're on sale again. They've pulled back a little. So if you want to learn more, go to the company's website, which is in the show notes, and the ticker symbol in Canada is TCFF, and on the OTC in the States, it's TCF. Art, really appreciate you coming back on the show to explain things further, and we'll be touching base with you again soon.
Okay, thank you very much. Talk to you later.